Hello and welcome to another episode of Monday Markets. As always, we're brought to you by Woo. Links available in the description below. Please read my long form article if that's satisfactory. There's a special sign up bonus pool for those who sign up using our link. If you don't want to do that, that's fine as well, but it's there and they help make the show consistent. And it's a good exchange where we have a lot of input and currently going through the middle stage of the fee revamp, meaning less centralization, a designated market maker program, and should over time lead to better execution with less counterparty risk. It's one of those growing pain stages at the moment, but it's a net positive change, and at the very least you want to keep your eye on it. So with that out of the way, let's talk about the market. So using our normal sort of high time frame breakdown, that not a lot has changed. That shouldn't be surprising given the price is essentially the same. But contextually, there are some clues and I think some evidence of weakness. For the time being, as far as the monthly goes, we're still just getting spikes at the range high. So whether you're using previous month's high as resistance or April's high as resistance, the market is just willing to absorb rips into 31k, and we've had no luck getting above there. So you can see on the weekly, that same picture, whether you're looking at April's high as your inflection point or the most recent sort of ETF high, we've had spike, 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 all closes below and no closes above yet. So that's kind of been the very narrow trading range we've been in. Fair value is some version of 30k. The market's been willing to scoop it up at the range lows, sell it at the range high, and that's really it. This is the weekly range, as miserable as it looks. The other contextual clue on the weekly time frame is that even using the highest close of this sort of April candle, initially we had some attempt at closing above it and using it as support. That then failed, and we're now closing. We closed below it last week, and we're currently trading below it as well. So it's pretty difficult to make a bullish argument at 30k based on the higher timeframes. On the monthly, it's just spiking at the range high. On the weekly, it's also spiking at the range high and closing below the highest close levels. So that's just indication of resistance more than anything. Now, could this simply resolve in consolidation and a big F-off candle that breaks out higher? Of course it could. I mean, that's crypto. But at the moment, there isn't a ton of evidence in favor of that proposition. So it's a bit tricky to come to that conclusion if you look at the market as it is right now. So on the daily time frame is where we've had the most action, as miserable as that may sound. Same picture as far as April highs go. Close above, no acceptance, close above, no acceptance. It's just not a market that's been willing to break out, and that is rather unfortunate, especially if you can consider the context clues. We had BTC European ETF approved and Larry Fink shilling for the, shilling Bitcoin essentially on live TV. We had the XRP case, which made the SEC look very weak and pathetic. A barrage of good news, essentially, and the market was still willing to sell into it, which makes it quite tricky. You almost have to ask the question, what type of news at this point would it take to push the market higher, or how much are sellers in control if they can just stuff any attempt at a range breakout, even on positive news? But before we get ahead of ourselves, the daily range is still intact, whether you like it or not. And that's because on the daily time frame, if we take the lowest close in this entire consolidation period, which is 29.8 to 29.9, we've had no daily close below there for the time being. So it's essentially still the same price. Below 30k, buyers have been stepping in. Above 30k, into 31, sellers have been stepping in, and that's sort of been the equilibrium of the market. I still think the buyers have a tougher job at it at the moment. The market feels heavy because it hasn't been that we've had bad news that's being absorbed and we trade back into the range. It's been the opposite, that good news is being absorbed and pushes us back into the range. So I think the dominant hand is with the sellers at the moment. It'd be nice if that changed, but I will happily wait for evidence of that, and I don't see a ton of evidence of that at the moment. If we go to the 4 hour, where we've marked out our range before, you can see that the daily range low and the 4 hour range low are essentially the same thing. If we use the lowest close, lands us at 29.8, 29.9. On the range high side, we have 31.2k, and that's essentially where the market has been. And again, to emphasize the point about recent price action, we had a stab at the range high, an attempt to break it. That immediately failed and actually offered a very nice retest entry before trading all the way to the range low. So if you want to be agnostic as to the price action in this range, I think that's reasonable, that we're still here, and whichever side tries to take the initiative has been unsuccessful. I think if you want bullish setups, at this point, either another breakout attempt at 31.2k, hoping this time is different. It's a very tricky trade, but sometimes they work, and at some point you kind of have to take a punt that the range is going to break. I think if it's going to be on the bullish side, maybe at the range high again, but you risk essentially becoming this candle. Alternatively, you could take a sort of mirror view of price action, that we've been in the same range, and now that the market has faked out to the upside, the next long setup, if there's going to be one, will come from a fake out to the downside. So essentially, we had a range, failed to break out, goes down. So on the bullish side, you might want to keep an open eye for fails to break down, goes up. But that hasn't been the case at the moment. The only failure has been on the breakout, and we haven't had similar price action at the range low. And even for that type of setup, it's not one that I'd want to buy blindly unless I see something really compelling on the attempt. You want the market to give you an invalidation in that scenario. So attempt to break down, then get back above, and at the very least, you've got more probability and some sort of invalidation on your side. Because the alternative, of course, is if it starts to break from the range and you buy, of course, there's a chance that that's the actual range breakout, and it just does this, and then you're not in a particularly good position. So the thing about failed breakout setups is in most cases, you might want to start a position trading those setups sort of below the extremity or above the extremity, but the probability really shifts in your favor once the market accepts back within the range boundary, not when it's trying to break, okay? So that's essentially the 4-hour view. It's quite boring, and that's because it hasn't changed much. One sort of trouble area that I have in mind for this week is essentially the mid-range. If we look at this cluster here, which was the last, the sort of 2-day consolidation before the big breakout attempt. We can just sort of box that out somewhat charitably, even using this day of trading. Cluster, block, whatever you want to call it, doesn't really matter. If we then superimpose our 4-hour range within the context of this daily level, using our lowest close and our highest close here, so between 29.9 and 31.2, you see that the mid-range of 30.5 lands in an area, or in the same area rather, as this daily cluster. So I think as your midterm pivot, if you're going to diddle in the middle, which I'm not a fan of, but as far as nearby relevant levels of resistance go, or short-term pivots, I think 30.5 is a decent one to watch. But in general, especially when the market is going to make it this obvious that it's ranging, the only setups that I think make sense are the ones that are taken at the extremity. So the extremity trade at or above the range high, extremity trade at or below the range low. Everything else is lower probability and just slightly trickier to trade. But these are the conditions we have in front of us, so we've got to, deal with them if you so wish. If not, that's completely fine. I think if you take a zoomed out perspective and say this range sucks, I'm going to wait until it breaks and then trade, that's a completely reasonable position. You don't have to trade every single range, every single move, every single rotation. That's a fantasy created by crypto Twitter that makes you FOMO for missing every 5-minute candle. I don't think there are any other comments as far as BTC goes. I guess if we get a range breakdown during the course of this week, at this point, I think we've spent too much time hovering over the shallow support level at 29 for it to be particularly pertinent. This level would only come into play if that failed breakdown scenario takes place. So for example, you have a poke deeper somewhere close to the weekly level, resulting in a reclaim back above. That would be okay. But generally speaking, we've just spent so much time consolidating on top of 29-ish that it's not a fresh level for me. And so the conviction there is lower. So on the long side, it either has to be a very compelling failed breakdown setup, just like this was a compelling failed breakout setup. That would be fine, like a mirror image of what we had at the highs happen at the lows. I think that's palatable. At this point, I'm personally not super happy to get involved with shallow pullbacks unless they result in a failed breakdown. So 29 just seems too close, for lack of a better term. If 30k is going to be resistance, I would expect 29 to roll over. So where does that leave us absent a failed breakout? And what if the breakout is real? Breakout to the downside, that is, or breakdown, whatever you want to call it, it's all the same thing. I think the earliest port of call is 28k on the weekly. That's sort of the last reasonable level if we're going to sustain any amount of faith in this ETF candle. And from a market structure point of view, you could still somewhat make bullish arguments that you had this downtrending structure, you had a breakout, and 28k would be an appropriate higher-low area before another attempt at the range. I really think that's what it comes down to. Anything below that just starts to look particularly treacherous because at that point you've sort of fallen back below support, you've retraced the entire ETF candle, and then the entire thing just looks ripe for poking at the lows and trading into 25, 24, and so on and so forth. That's really it for BTC. So just to summarize, unfortunately, we are still in the same range between 29.9 and 31.2-ish. If you're going to diddle in the middle, I think there's some daily confluence in the 30.5 midpoint. The most recent price action is concerning because we had good news and we had an attempt at a break and that breakout failed. So that's not good. It makes me feel like the market is heavy. Appropriate long setups in this context. On the far end of what's palatable, another breakout attempt at 31k if you're willing to bet on this time is different. I don't mean to dismiss that idea completely, but it's just not the type of trade I like to take. On the other hand, the other two palatable bounce scenarios would be a similar failure to move through the range at the lows. So this failed to move, went down. If this fails to move, go up. That would be acceptable. Or if the range actually breaks down, I'm not interested in 29k because it's too close at this point, and I think I would look towards 28 as the next weekly level. And that's all I've got for BTC, unfortunately. Hopefully that's helpful. As far as ETH goes, the weekly time frame is still being a complete nuisance, if you're bullish, that is, because this 1930 breakout level is still resisting as far as the high time frame candle closes go. So in particular, the weekly time frame resistance, close below, spike, close below, and we're currently trading below it. So I think the clearer weekly swing trade is still, close above there, and there's a big sort of volume gap to fill until 2500, but that's a wish up until resistance is broken, and the market has just not been successful in breaking it. So that swing trade is unavailable, and resistance is resistance until proven otherwise. As far as pullback levels, I think if you're going to be very charitable, the earliest weekly version of that is at 1800, as we've discussed. If we look at that 1800 level on the daily time frame, it takes us into that cluster we spoke about, also at 1800 as an important level. So that sort of gives us a range to work with of some sort. But absent that, this just doesn't look that great. And it's still bigger picture getting stuffed at 2000s. If you were to just forget the precise mid-range price action tomfoolery and sort of zoom out, BTC is still struggling at 30k and ETH is still struggling at 2k. These big round number inflection points are proving troublesome. So while that's the case, it's very tricky to get optimistic in the near term, I think. But for your shorter term trading, I still think this ETH range is relevant. Obviously, anything below 1800 would start to look pretty bad for reasons outlined in last week's video, that we've had a big shelf of support at 1800. We've already deviated once. If we break down below it again, it's less likely to be a deviation and more likely to be a real breakdown. So that would be quite a bearish continuation signal in my mind, at least. But for the time being, again, similar story in ETH as to BTC. Any attempt at a breakout just keeps getting stuffed somewhere above the breakout level. In this case, it was this sort of daily high that proved troublesome, and we know that the weekly close ended up being not complementary either. So that's very tricky. An additional confounding variable for ETH is that ETH BTC still looks rocky. If you want to be charitable, if you take this entire leg of price action pretty much since the end of last year, really, and into this year, this is quite a clear downtrending structure in ETH BTC. High, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. I mean, this is pretty textbook bearish market structure, I think. Certainly, even if you disagree on how the lows have been outlined, I think the highs are fairly unambiguous in terms of making lower highs. So you want to see a shift in market structure, either by breaking above one of the previous highs and shifting market structure that way, or making a new swing high and then breaking that one at some other price. But for the time being, neither of those options are available, and this thing is just bleeding out, to be honest. So that's not great. I think the earliest ETH BTC support I've got is 57, 56s, and then if things get really ugly, 42s or thereabouts, sort of larger retests, and none of that is particularly pretty to look at. Narratively, it's also tricky for ETH because the narrative in general, as far as why the market reversed from its downtrend drift, is very Bitcoin-centric with the Bitcoin ETF. And so you've got a year-long, well, not quite a year-long, but a significantly prolonged downtrending structure in ETH BTC, while also now whatever catalyst we have in our favor to be counterbalanced to all the negative catalysts we have are BTC-centric, not ETH-centric. So that makes it very tricky. So ETH BTC, not going to find any allies there for the time being, at least from a high time frame point of view. And we know that ETH USD is resisting 2000 with everything it's got, essentially. So that the all clear isn't available, both on the BTC pair and the USD pair. So that makes it very tricky. The stuff is just that resistance, and resistance is resisting. I guess that's the simplest summary I can give. In terms of not finding allies elsewhere, I think that also applies to legacy markets. I've been talking about this for a while, again, not with any degree of precision, given this isn't a market that I actively trade, but we essentially focused on this monthly cluster of resistance in the S&P between 43 and 45. This looks like a really big box, and it is, but if you're using it for a higher time frame directional bias, it doesn't really matter. If you wanted to feel more intelligent, you could always break it down as this being the pre-breakout consolidation, range high at 45s, range low at 43s, and you can get a midpoint from it at 44s. unsurprising, but just so it looks nice on the chart. And we're really pushing up against the extremity here as far as resistance goes. I think there's a decent chance that we either spike or overshoot this just a little bit and trade into the close of this last lower high and sort of the 45, 46 seems a bit steep, but 45 plus as resistance before we get some sort of reaction, at least to the mid-range, if not lower. The alternative, of course, is if this cluster gets completely smoked, we end up going for some sort of previous high, range high, all-time high test, which would look absolutely mental, but would be quite worrying for crypto if the S&P is essentially making new all-time highs or close, and Bitcoin is still stuck at 30K. I mean, even this entire diverging leg of the monthly breakout from, 41, 4200 and these monthly up candles, they just don't really exist in BTC to the same extent. Certainly not in the last month or two. We've been stuck at 30K, and this entire leg of legacy, which is now in a very precarious spot, we haven't been, aligned with. So if this thing even starts to pull back moderately, then that's just another headwind to consider in a market which seems to be quite sensitive to headwinds. Because again, my current read is that the good news is having very minimal sort of impact on the market, which isn't great. And then the bad news seems to make at least altcoins, but also Bitcoin in general, a bit more jumpy. So that's some cause for concern in the short to medium term. But this is one of those situations where it could change pretty quickly. So, read our newsletter and watch Don's streams and follow Twitter, etc. For updates as they come. But I wouldn't overthink this too much for the time being. I do think the lack of follow through and the lack of impact of good news is concerning, and it makes me worried. But purely from a technical point of view, you can just map out this 4-hour range that we have and derive a directional bias therefrom, and probably will be completely fine. As far as BTC goes, and I think the same applies to ETH for that daily range and weekly resistance. That's it. That's all I've got. Hopefully that was helpful. Wanted to keep it brief. As always, the show is supported by Woo. You can support them by support us by supporting them rather. Links available in the description below. Again, fee revamp and designated market maker incentives coming in to make the execution better with less centralization. Some growing pains there, but I think the net outcome will be very positive and still have all sorts of bonus sign-up stuff for our affiliates specifically, as well as trading competitions going on. So it's just something to check out if you want. Or don't, it's your life. But if you made it all this way, leave a like on the video, subscribe to the channel, leave a comment, do all the normal stuff that make fledgling channels like ours grow, or give us a chance at the very least. Hope you'll have a wonderful start to the week, and I will see you later. Goodbye.